growth in the context of the market we operate in. And the fact is that the market growth, as I mentioned earlier on in the presentation, has clearly moderated as we've seen in the quarter. And, we have to wait and see that in the near term, we might see a little bit more period of moderate market growth before things pick up. In the medium to longer term, we remain very positive.
So for a category like FAL, for instance, wouldn't you be making the market as such?
No, so I think in terms of the whole skincare, of which FAL is one component, Pond's is another, Lakmé is other from the HUL stable, and then of course you've got competition. We have seen slowing growth, market growth I'm talking about, in skincare as a whole. So it's not just Fair & Lovely. In skincare as a whole, we've seen a slowing rate of growth. And, that is clearly the factor of discretionary consumption slowing down that's playing through. So it is an overall phenomenon. On our part, we are making sure that our brands remain strong. They get refreshed and rejuvenated from time to time, and we put the appropriate investments in order to drive competitive growth.
Okay, thank you. Thank you very much. That's it from me.
Thank you, Nilay.
Thank you so much, Mr. Shah. The next question is from Mr. Richard Liu from JM Financials. The line has been unmuted.
Hi, thanks for taking my question. So with respect to your comment on slowing discretionary spends, would not the higher-end Pond's and Lakmé be a bit more discretionary than FAL? Or is your reading that the discretionary spend issue is more prominent amongst a certain class-stroke section of consumers?
I think, Richard, the hypothesis that there is obviously an interplay between, what is discretionary for one group of consumers may not necessarily be discretionary for another group of consumers. So there is some interplay there. But when you just step back and see overall, there is certainly an element of slowing growth that we have seen in the market. So I'm talking about market-reported growth. There's very clearly something we have seen. For example, one of the things we called out in our skincare, chart was we talked about the fact that Pond's growth was led by very solid performance in anti-aging. Now, I think you can infer that the anti-aging product at this point of time is more likely to be consumed by a section of consumers for whom maybe the budget pressures are not as severe today, or maybe they are non-existent today, and therefore it's really for them. It's really about what are the products and regimes that they want to consume. So, a long answer to your question that yes, there is some differentiation across consumers.
The other point related to this is also, if one were really so stressed for budget, should not one have, actually seen some bit of a downtrading, especially in beverages, especially tea. We spoke about that some time back. The result obviously doesn't suggest, anything like that. So, short question is that, do you think there is any other issue, in skin, other than just, people cringing back on discretionary, or so-called discretionary items?
So I think, Richard, in this, the situation is that the way consumer dynamics are, it is not so straightforward to be able to make some of these conclusions. We don't see those patterns play out exactly the same way as we would hypothesize. And is there a possibility that there could be something beyond just slowing down of markets for skincare? Maybe they could. And these are the sorts of things that we keep asking, but I would be honest to say that we don't have a watertight answer for all of these things. And we observe some things which are there. Our job, what we can do, we can't answer all of these perfectly, but what we can do is to make sure that all our brands in all our categories at all points in time remain competitive in the context that we find ourselves in. And because we have a portfolio at the top, middle, and the bottom, we are that much better placed to address different scenarios as they emerge. Sometimes consistently across categories, sometimes seemingly inconsistent in terms of behavior across categories.
Sure. I had another question on PP margin. Now that has become really volatile these days. On the adverse impact due to lower skincare growth, I think the same issue was there in DQ as well, but I remember PP margin had expanded that quarter. If you can just throw some light on this one, please.
I think, Richard, the reason you see this being volatile, I'm afraid, is because, I think you'll pay a lot of importance to quarterly margins, and I think we've said on multiple occasions that, we want to look at performance, whether it is growth, whether it is margin, but particularly segment margin. Looking at it quarter to quarter is likely to likely to mislead rather than give more clarity. In terms of this quarter, I think I called out that a large proportion of the margin being lower was the increased investment in A&P. In a few previous quarters, we've also made references, for example, to the timing at which molds for relaunches, molds for innovations come into the business and get charged off. So, these are things, therefore, when you look at a quarter's number, there is maybe too much noise. I'd really suggest that you take a slightly longer-term picture.
All right, sir. Thanks again for that, and wish you all the best.
Thank you, Richard.
Thank you so much. The next question is from Mr. Sanjay Singh from Standard Chartered. Mr. Singh, your line has been unmuted. You can go ahead and ask your questions, please.
Yeah, hi. Just wanted to know that your volume growth, this 6% or 5.5% this quarter. Now, does it get helped by any way in the changes in the Weights and Measures Act, because some of the 90-gram soaps would have become 100 grams?
Well, when I take an aggregate for the business as a whole, not really. There'll be some ups, there'll be some downs. And, frankly, I must say I have not tried to really look at from that dimension. It's, I don't think, a major factor. There'll be both positives and negatives. It's possible that on aggregate, the weights might actually be slightly down. So, no, not really.
Okay. Just another clarification I wanted in terms of volume calculation. If there's any, grammage free as a promotion, does it come into the volume growth calculation? So if 100 grams plus 25 grams free, does it mean a 25% growth in volume?
Yeah, sure. If you are giving more volumes to the consumer, whether it is as a promotion or whether it is selling the higher pack size or whatever it is, if it is volumes that we are selling to the consumer, it would come into our volume growth. That's correct.
Okay. Now, I think just somebody asked on the personal products margins, I understand short-term movements are there, but over even last 4 or 5 years, we have seen it trending down, albeit, very marginally. So from, if I remember, FY8 used to be some 27-28%, and we're now at 24-25% kind of levels. So is it something because where we see a competitive intensity high in this segment, or where FAL keeps on growing slower than the overall PP growth, and hence margins would come off a few bits or here and there every year per se?
I think, I've said this also earlier, personal products as a segment has got a set of categories, has got a very strong potential to grow. Part of the work we have to do is to really develop the market, and for that we need to invest behind developing the market. The personal products, while it is grouped together as one group, obviously has a variety of categories from skincare to hair to oral and so on, and obviously each of these operate at different margins. I think the most important point is that this is a very exciting space, got great growth potential, and broadly speaking, the segment margins are about 900 to 1,000 basis points higher than the company average. So our task is really to keep driving superior growth, and then it becomes very accretive to the business. Whether the margin percentage is 10 or 20 basis points here or there is, to my mind, the lesser of the issue. The more important priority is to drive growth.
Okay. That's it from my side. Thank you.
Thank you, Sanjay.
Thank you so much, Mr. Singh. The next question is from Mr. Vivek Maheshwari from CLSA. The line has been unmuted. You can go ahead and ask your question.
Hi. One more question on personal care margins. The 215 basis point decline of that, would it be possible to quantify royalty impact? Because my sense is royalty will have a disproportionately higher, salience in case of personal care. Is that a fair assumption?
Not really. I talked about, royalty being about 30 to 35 basis points overall impact for the quarter. And it would not be dramatically dissimilar for personal products. So the biggest driver clearly is the step up in spend in A&P. And then, of course, you have got, a raft of other factors.
Okay. The reason I ask this is because in case of soaps and detergent, there will be the salience of Hindustan Unilever brands will be much higher than compared to what it would be for personal care. Is that a fair assumption?
Well, that is possible. All I'm just saying is if you look at the 215 basis points that you're trying to quantify, Vivek, and try to get the priority of driver, the biggest driver by far, more than half, is A&P.
Okay, understood. The second one is the royalty would be hitting other expenses, right? In the main P&L?
That is correct.
So, other expenses as a proportion of revenues are down, say 60 basis point. If I adjust this 30-35 basis point, there is a 95 basis point saving in other expenses. Could you indicate broadly which heads would have seen such kind of saving?
So we are, there are a variety of things that go into other expenses. For example, our entire area of distribution costs, logistics costs, distribution costs, they are entirely part of advertising, of other expenses. When you look at all of the overhead costs of, running the establishment other than people are all in other expenses. Royalty, as you pointed out, in other expenses. And as we've said, our task and our focus is really to make sure we manage our costs very, very tightly. One part is on the supply chain, and the other part is on all the other costs, whether it is marketing spends, whether it is overhead, whether it's distribution costs. So it will be across the board, and this is not necessarily a new phenomena. One of the things that we talked about earlier is our approach in managing costs is a holistic end-to-end approach. So across the whole value chain, whether it is on cost to do with materials, whether it's on cost to do with conversion, whether it is on cost to do with our marketing spends, or indeed cost to do with overhead. So across the whole value chain, we try and manage our costs tightly.